So I'm excited to be here with Nicole Grimm, who happens to be one of the fastest growing loan officer teams in all of Pittsburgh. We're really excited. You have 10 years of mortgage banking experience, and you're here to talk to us about the Pittsburgh market, interest rates, and a lot of other things that if you're a buyer in today's market, you're going to want to hear what Nicole has to say. So Nicole, thank you for just joining me and, being able to share your expertise about mortgage banking and real estate with those that happen to see this video.
Sure. Thank you so much for having me. I'm excited to be here and talk to any potential clients and my real estate partners about the market and some things that they can expect moving forward if they're looking to purchase a new home.
That's cool. And I've already said it. So I've failed to conduct the background with the shirt. So if my head's floating, it is what it is. We're just going to roll with it. So before we get started, tell me a little bit about yourself and kind of how you got into this incredible industry.
Sure. So I got into the mortgage business whenever I was 21 years old. I was in college at the time. I was attending Slippery Rock University for finance. And honestly, whenever I got into the mortgage business, I wasn't thinking like long-term career. Whenever I started, I literally worked my way from the ground up. I started answering phones at a local lender, and I got to meet the loan officers during my experience there. And one of them in particular, she really inspired me. I really owe my career to her. She kind of took me under her wing and trained me to be the loan officer that I am today. And I just really idolized her. She was absolutely incredible, such a positive person, and just a complete girl boss. I idolize everything about her. I wanted to be, just like her essentially. And so here I am about 10 years later. I'm working with my husband, which I'm so grateful to have him, help me. My business has grown to the point where someone that I can trust to really refer my clients to, if I need help with a cost sheet or pre-approval. And there's really no one better than, Mike, my husband. I also work with my brother, Ryan. He's on our team as well. He recently joined, and he's our transaction coordinator. And he's, basically making sure that all of our files are going to closing nice and smooth, that nothing's falling through the cracks, no paperwork, that everybody's really staying on top of their dates. And we really couldn't do it without him. So I'm super lucky to have these two gentlemen that I love very much and that I trust wholeheartedly to help me elevate, my business as I continue to grow in the area. And personally, I love to go, out to eat. I love to travel. Traveling is something that I'd really like to get into now more again, since the restrictions are starting to be lifted. And we actually have a work trip coming up here in a couple of weeks at Cancun. So I'm really looking forward to that. But that's really, one of my favorite things to do is get out and experience new cultures, try new food, see new things. So
that's awesome.
Yeah,
that's really cool. Was this a record application month for you and the team?
I think it was. Yeah, we had a bunch of applications this month. Honestly, it's hard for me to even keep track. I feel like I had like whiplash there from last month, which is a really good thing. And we're so thankful to all of our partners and to all of our clients that are referring us business. Seriously, thank you from the bottom of my heart. It means the world to us. But it was a very, very busy month. So, interest rates aren't deterring people from, going out there and purchasing their home and working on building wealth through homeownership.
I don't want to just pass over that because you and your team were number 2 in the entire region for new applications submitted just last month. So that is a huge accomplishment. There's 150 loan officers and teams that you compete with, and to be number 2 in the region just is a testament to your growth, your referral partners trusting and believing in you, and obviously your customers trusting and believing in you to deliver them with the best rates, products, and expertise. And I want to congratulate you for that, because I see more. I see this Grim squad growing to potentially adding more and more, not only volume, but more great people to the team, so you can continue to serve more customers in the greater Pittsburgh market.
Absolutely. Yes, that's the goal. And we really want to take our time and do things the right way. Like you said, I've been doing this for 10 years. So our process means the world to us. We want to make sure that every single deal, we give it 100%, that every single transaction is being taken care of with the utmost care. And whenever our referral partners send us business, or our past clients send us business, that they're going to be getting that, referable experience essentially. So, and that's what's going to keep us going. So if our process is second to none, we have a fantastic process, then we're going to continue to grow in the business. And that might sound like it's a simple way of viewing things, but believe it or not, it's actually very difficult in this industry to make sure that every single transaction is going absolutely perfectly. There's a lot of third parties, a lot of people to manage, a lot of paperwork to manage. And that's what we're really focusing on becoming exceptional at, is managing all of those things, so that when people close, they say, wow, that was the smoothest process that I've ever had. I heard all these nightmares about the mortgage process. And that's because we want to make sure that we're taking care of everything, that we're putting out every single fire, handling that in the background, so that our clients and our referral partners are able to, focus on buying their house, and focus on, if you're a referral partner, going out and selling some more houses.
Yeah, no doubt about it. I mean, you got to have a lights out process when it comes to just executing for as many customers as you serve. So that's phenomenal. But what I do want to shift some gears here, and I want to just dive right into like the market conditions. And the first thing I think about in a market like this, where the Fed is actually meeting today to talk about potentially raising interest rates, what can you tell me about what you're seeing in the interest rate market versus, maybe home appreciation and kind of a combination thereof? Like, what are you seeing?
So what we're noticing is that interest rates are going up because the Fed is trying desperately to hedge or manage inflation. And really, that's one of the biggest tools that the Fed has to kind of slow the economy down, is increase interest rates. So I think we're going to continue to see that until we start to see those inflation numbers come back down. So likely the news today, and I think that what we're expecting is at least a 50 basis point rate hike today after the conclusion of their meeting. Until those inflation numbers come back down, we are going to continue to see that, I think, unfortunately. But with home appreciation, we have had record banner years over the past 2 years, with some areas seeing a 20% appreciation rate year over year, which is absolutely fantastic. And we're expecting to see that the rate of appreciation over the next couple of years is going to be averaging around 6.1%. So, that's the reason why you want to get into purchasing a home, right? A home is an appreciable asset. So the cost at which you borrow, we can always look at refinancing an interest rate, but the price at which you buy, if that's going to continuously keep going up, then of course, one thing remains constant and true in real estate, is that you always wish you bought sooner, right? And we're expected to see that property values are going to continue to go up. So I think a lot of homeowners need to put that in perspective. New homeowners need to put that in perspective, so that they're not essentially waiting to get into the market and paying a lot more money for the same house, a year or two later.
Yeah, for sure. And, Well, I'll ask you, I mean, do you forecast interest rates to continue to rise?
I do, yes. Like I said, I think until we start to see the inflation numbers come back down, I don't think that it's possible that the Fed can really, reduce interest rates. So until the inflation numbers start to get under control somewhat, I don't think that we'll see that the rates will come back down. I think long term, though, absolutely. I think that long term, within the next 12 to 18 months, we're going to be looking at completely different economic conditions, which are likely going to support a better rate environment, which means for those of you, that are out there that are looking to buy right now, you can refinance likely within 12 to 18 months, refinance into a lower rate. What you don't want to do, like I said, is get caught up and end up buying the house, at 10% higher or 20% higher if you wait a couple of years. And, you could have just refinanced your rate if you would have bought now.
Yeah. And, I know we were talking about this earlier, but it just kind of has me thinking, like, if we can forecast interest rates to go up in the next 6 to 12 months, rates could continue to keep climbing. And housing prices, just based on the lack of inventory, continue to climb at what we're seeing across the country is it somewhere between 5 and 9% in terms of appreciation. Like, I really believe it's going to benefit everyone to take advantage of purchasing now. And like you said, down the road, 2-3 years, look to potentially, I mean, you said 12 to 18 months, maybe 12 to 18 months, maybe 2 to 3 years, refinance that loan where we have more favorable interest rates that are forecasted down the road. And rather than waiting, because waiting could potentially cost you substantially more just in purchase price. And you're really not going to gain anything there by waiting for an interest rate to come back down. So I think it's phenomenal advice to encourage home buyers to get into the market now before rates keep going up and home prices keep going up. It's pretty interesting, but I do want to talk a little bit about Pittsburgh in particular, because you are in that market every day. You're serving the real estate community and that there every day, whether it's out in the suburbs or downtown in the city. What do you feel like buyers are faced with right now from like a competitive standpoint? And what's some advice that you would suggest giving like a first-time buyer?
Yeah, from a competitive standpoint, it is still super competitive in a lot of markets in Pittsburgh and some of the surrounding suburbs. I am starting to notice, though, that competition is slowly starting to cool. It's not like it's we're not seeing a buyer's market. It is still a seller's market, and it's basic economics. It's just a supply and demand issue. We have more buyers than we have houses available for sale, essentially. But we are starting to see that some markets are starting to cool, making it a little bit better for buyers to negotiate, maybe getting the home at asking price as opposed to paying over, or maybe negotiating in some seller paid help if you need closing cost assistance. So I'm starting to see some offers that are being accepted coming through with those types of terms, which is really encouraging. I will say, that the past year was pretty tough. A lot of deals are being negotiated over asking price. Seller assistance was pretty rare to be able to negotiate that in. But for homeowners that are looking to get into the market now, rest assured, the market is starting to cool somewhat, which is going to allow you a little bit more negotiating power, moving into your home search. And for those of you that are first-time home buyers, my advice to you is, likely if you're a first-time home buyer, you're probably renting right now. There was just some recent information that was published that stated that the average cost of rent had gone up 13.1%. And then the new average rent in the 50 largest metros is $1,800 a month. So if you're out there and you're renting right now, your rent just got a lot more expensive. So as a first-time home buyer, you have, two ways to look at it. You're spending the money every month regardless. if your rent's $1,000, you're spending $1,000 a month. But where my goal and my job is as your loan officer is to come in and take that $1,000 a month and tell you, what price range you can afford once we go through your pre-approval to get you, $1,000 a month in your mortgage. So instead of paying for somebody else's mortgage, pay for your own. And like I said, it's something that if you are worried about the rate, likely they're going to come back down in the future. And then also if rents keep appreciating, if you buy a home, that's rent control. You're buying at a fixed rate. That's rent control for you. So you're essentially protecting your monthly expense, your monthly budget by purchasing a home.
Yeah, I haven't heard that term before, but you're absolutely right. I mean, as a homeowner, you are controlling your rents. At the end of the day, it's stabilizing a 30-year fixed or even, taking advantage of some of the other products in the marketplace. But you're right, you're not subjected to what could be record increases in rents, because let's face it, there's not enough rental occupancy available either. In fact, I heard that vacancy rates were the lowest they've been since 1984. So, yeah, there's a shortage in housing across the board. And as a result, I think you'll see not just interest rates creep up a little bit, but housing prices going up, rents going up. And it's like, hey, where do you want to be? Personally, I would want to be the one owning a home because we didn't even really dive into this yet. Just the benefits of home ownership and what that can do and how that can change, the trajectory of your financial wealth.
Absolutely.
Yeah, I'm sure you've served a lot of clients in the last 10 years, and can you imagine, what the equity that some of your first customers that purchased homes for 10 years ago in the Pittsburgh market? Can you imagine how much equity they have in those properties at this point?
I've seen it. I've had plenty of clients that I've worked with buying their second, third home, buying investment properties. The amount of money or wealth that they were able to build through home ownership is exceptional. And a lot of people are talking right now, about maybe a possible recession. You buy a house, buying a home, it's recession proof. You can look at historical data, not react emotionally, but look at historical data, which shows home prices still appreciating or stabilizing even through past recessions. So, don't let that deter you from looking to get into the market, whether you're buying your first home or you're looking to sell your house and buy new.
Yeah, and the product offering. When I think about a first-time home buyer, someone who never thought that they could buy a home, and then just some of the products that are out there with these low to no down payment options, with grants and access to funding to get people into their very first home, which will eventually appreciate. It'll be rent controlled, so to speak. And your job as a mortgage professional, and I want you to talk a little bit more about this, but it's really your job to make sure that you can position them financially to be able to afford that house, which would in theory help them grow some equity and effectively their wealth.
Absolutely. That's something that my team and I specifically focus on every single day, is looking at new products that are available, whether that's community grant programs, assistance programs, of course, the products that Movement offers. And now it's so much more affordable to buy. Whenever I got into the market, 10 years ago, we didn't have these types of programs that were available to first-time home buyers. We have some programs where you're actually getting your closing cost assistance given to you as a grant. There's no payment required for you. It's free money. It's fantastic. So some of those products that we have are actually making our clients win offers in this competitive market, because we're able to look at more favorable financing options, maybe like a conventional mortgage, tie on some closing cost assistance with that. And instead of that buyer asking the seller to pay their closing costs, we're giving them their closing cost and they don't have to, ask the seller for it, which is getting their offer accepted. I have 4 people in my pipeline right now that is their story in my active pipeline, because they were able to go conventional. Whereas if we didn't have that product, they probably would have definitely been FHA for the lower down and asking the seller to cover, their closing cost. So we do have so many fantastic options for those that are looking to buy their first home. So, if you think like you have to put 20% down to purchase a home, that's not true. And I still hear that every single day in my career, that people think that they have to put 20% down still to buy, or that they shouldn't buy until they put 20% down because they have somebody in their family that's telling them, that's how it was back whenever they had purchased their house, which is true. But I will tell you that mortgage insurance has completely morphed over the last decade that I've been doing this, where it's become so much more affordable for first-time home buyers and buyers in general to purchase a home. If you have exceptional credit, or good credit, your mortgage insurance is not going to be outrageously expensive. So for a lot of people, with the rates and the cost to borrow still being low, even where it's at now, still being historically low, they're still putting minimum down, because what they're looking at is their rate of return on, an alternative investment. If they can make 8%, let's say average rate of return on something else, why would I put more money down to get rid of my mortgage insurance is, $40 a month? Why would I put more towards this? And it's really not going to do much towards my mortgage insurance whenever I can take those additional funds and I can reinvest them in something where I'm making, a higher rate of return. So
you brought up something that I just want to highlight again. I can't help but think about all of the advice that non-mortgage professionals are providing potential home buyers out there. And, you brought something up like you shouldn't buy a home unless you save 20% down. And I have to tell you, and maybe you can tell me, the time that it's going to take someone to potentially save 20% down could be years. And if that's the case, what is the cost that person could be foregoing in purchase price today versus purchase price years from now? We just talked about it. I mean, they could be foregoing $100,000, $150,000 in future equity by not being informed about the lower down payment options now, so that they can get into what is forecasted to be a rising real estate market.
exactly right.
Yeah. That's pretty incredible. And I haven't looked at it that way before. So what is the Grimm Squad going to be doing for the rest of the year to help get out into the community and tell our real estate partners and our consumers all about these incredible tools to get them access to home ownership?
Well, we're going to be doing a combination of things. You guys are going to be seeing a lot of me likely on social media, and then also just in my community. Right now, one of the things we're working on is something special for teachers and for police officers. So we're putting together a special program. I just ordered some marketing material for that. So make sure you stay tuned there. But from a general perspective, we do plan on doing some trainings, offering some trainings for new agents specifically. I do know that over the past 2 years, I've seen so many new agents come into the business, and real estate is so exciting. But ultimately, as a new agent, you need to be equipped and prepared and knowledgeable to really stand out against all of your competition, because there are, so many new agents. So I am going to be putting together some trainings, in-person trainings, to get you out and networking, meeting some new people in your business, but specifically to discuss the mortgage process. And I'll probably interpret and include some of my partners for title and maybe appraisal insurance in some of these trainings, so that they can go over, their roles with you as well. And also just on social media, I'll be coming at you probably pretty often, giving you some updates economically and on some mortgage products. So make sure that you follow along with me on social media as well. And I'll be spitting some hopefully some good information at you
Absolutely.
week to week here.
That's good. Well, I want to thank you. I want to thank you for jumping on with me today and just talking a little bit about the Pittsburgh market. And I can assure you that anybody watching these videos will be well informed, and ideally they give you a call. I'm sure you have a conversation or two with many people that are just trying to learn a little bit about, just getting into the real estate market. And you're doing a heck of a job, and the numbers are proving it. And I think there's going to be more exciting things for Team Grimm in the future.
Well, thank you so much. I appreciate that. And yeah, for anyone out there that's looking to partner with us or for our existing partners, we thank you so much for all of your support. And we'll do everything that we can to help you grow in your business. The more you grow, the more we grow. So we will be invested in helping you in your business always.
Awesome. Thanks, Nicole.
All right. Thanks, Tom.